Hi, guys. I'm Lawrence Linker from XD Academy. Today, I'll be speaking with Markus Thielen, head of research at Matrixport and author of the new book, Crypto Titans: How Trillions Were Made and Billions Lost in the Cryptocurrency Markets. I'm excited to talk to Markus about his experience in crypto, the market cycles that he covers in his book, and his view on how things stand now. Markus, how are you today?
I'm doing great. How are you?
I'm well, although these are turbulent times for crypto, certainly. But why don't we start, before we get into that, just tell everybody a little bit about yourself and how you got started into the crypto world.
Yeah, thanks, Lawrence. I mean, I have been, working for hedge funds basically all my life, and it happened the last kind of like three different roles. There were more kind of crypto focused. So I worked for, a sizable investment bank where I managed a macro portfolio, and there was kind of like 10% was crypto, and then from there I moved into crypto full time as the chief investment officer for an Asian crypto conglomerate that had a lot of mining exposure, but also was managing 14 different crypto funds, and I was overseeing them all. And they also had, of course, some VC business, also specifically focused on crypto. And currently, I'm the head of research at Matrixport, which is kind of like a $4 billion in digital assets investment platform. So I'm head of research. So I'm coming up with ideas, helping people to educate about the market, what's going on, and kind of making suggestions how to position for the market, basically.
Yeah, and for those that don't know you, I think you're probably one of the most well-known sort of research guys certainly in Southeast Asia. Put out really great insights on your LinkedIn, and I've been following you for quite a while, your newsletter as well. So I was really excited when you came out with the book, and I have to tell you, I'm really enjoying it so far. So in your book, you kind of talk about four market cycles that we've seen within crypto now. So tell me a little bit about that, and please use this as an opportunity to sort of entice people to pick up your book like I did.
Yeah, thanks. I mean, really, thank you for the opportunity. I think it's really, I really wrote the book, for kind of for everybody to just understand really how the crypto industry, works. For a lot of people, it seems to be like all random. It seems to be like a lot of hype. Projects come and go. But really, it's really trying to help everyone to understand there's really like specific cycles and specific themes that are really driving the market, and I think it's very important to really understand that these four crypto bull markets, so 2011, 2013, 2017, and 2021, they were all driven by different kind of momentum, by different themes. And in the end, the underlying theme is, of course, that technological adoption continues. User numbers keep on growing. Right now, there are around like 420 million people that hold cryptocurrencies. This is really like verified data. And I think it just, the industry has become like so large. But again, I think what's really lagging is really for people to understand how policy decision has really driven the cycles and how momentum has shifted from one theme to another. And this is what we're kind of trying to highlight in the book.
Yeah, so you're saying so many things that I want to dig into. So I want to come back to the policy decisions, because obviously we have to talk about that right now. We're in such an interesting place when it comes to policy towards crypto. But you mentioned also about the different bull markets being driven sort of by different themes. Can you talk me through that and maybe walk me through the major themes in each of the previous bull markets?
Yeah, when we really look at 2011, which seems like an eternity ago now, and it's very simplistic terms, because there wasn't really much else available than Bitcoin. Really, Bitcoin was really seen as a new payments system, and of course we had the Silk Road, we had WikiLeaks, where people could suddenly like pay with cryptocurrencies, and of course cryptocurrencies was just primarily Bitcoin back then. And that was kind of the first step and the first big driver. And then of course there were other methods how Bitcoin was trying to be used, predominantly in the US, for some payment systems, but again it didn't really take off. And then of course we had 2013, a very different bull market, and of course this bull market actually overlapped with some policy decisions in the US that pushed the bull market from the US initially towards Asia. But of course, it was 2013. It was really when China really started to embrace Bitcoin itself. There was a state-sponsored TV documentary in CCTV, um, talking for 30 minutes how Bitcoin is a new form of money. Baidu, the China Google, basically was starting to accept Bitcoin for some online payment services, and this really caused Bitcoin to rally like 5,400% in 2013. And of course, it overlapped a little bit with the European debt crisis, where we had a bank run and the deposit bail-in by Cyprus. And, a lot of people were worried that, that Spain and Italy would be next, the dominoes to fall and also bail in, depositors. And this caused also like initially some spike, but the big spike was really China. And then, of course, 2017, we had the whole ICO craze. And again, I think the ICO craze also stopped with there was a question, what is the security? It stopped with the SEC. We didn't run out of money. We didn't run out of ideas. It was more the regulator said, okay, this is enough. I'm back now. And I think this is very similar, of the 2021, bull market that stopped at one point. And of course, this was driven by the yield farming craze. And as a really the whole DeFi summer, building an alternative financial payment system. I mean, there are like all these overlapping themes, but I think what a lot of people don't really realize is that regulation was always there at one point, and regulation always kind of crippled the market for some time until the market find a newer, level of least resistance, and then kind of like re-embraced the whole crypto again, and found a new way to really reset itself.
I'm shocked. I'm shocked to hear you talk about a state-sponsored documentary about Bitcoin in China, because obviously, famously, crypto is banned in China now, if I'm not mistaken. It seems that maybe the Chinese government is opening up to crypto a little bit through Hong Kong. But help me understand how they went from such a pro crypto stance to then eventually banning it, and then how to where we got now.
Yeah, I think really, 2013 is really like and really probably the most important year for crypto itself, because on the one side we had a lot of technological advancement in the Bitcoin mining community. So there were a lot of, there were several miners that in China that really developed, these machines that were so powerful that basically you got your money back within like a week or a month, by buying these machines and mining Bitcoin by itself. I mean, before, you had like, a guy in New Jersey plugging two computers together and mining a few Bitcoins a day here and there. And of course, then some of these entrepreneurs in China, they managed to just make these machines so powerful that basically 70 to 80% of all the mining was really happening in China. And I think then, you might remember this, you had the big Sichuan earthquake happening. And one way to raise funds and raise awareness for this earthquake and help the victims was actually to raise Bitcoin. And somehow the government said, oh, this is really nice because harmonious society, we help each other. And this was really seen in a good spotlight. And then somehow CCTV came up with a 30-minute documentary really praising it. And if you have been in Hong Kong for a long time, you might remember this was also the time when there was a lot of capital flight, where there was a lot of over invoicing from China into Hong Kong. So the export numbers from China into Hong Kong would look very differently than the import numbers from China into Hong Kong. There was a lot of overvoicing, around like 70, $80 billion per quarter. And I'm sure, some maybe 5, maybe 10 billion, dollars a quarter was finding its wealth, its way into cryptocurrency. So it's way mostly into Bitcoin. And I think at one point it became this like so much speculation that it was seen as unsafe for the Chinese government. And then basically towards the end of the year, so this was really a really strong but really powerful bull market, as I was saying, 5,400% return for the year, where the Chinese government really said through the banking system, stop banking with cryptocurrency companies, stop doing all this, and then they lost the banking access. So it sounds very similar to now, and this is why this year is actually very, very important. This year 2013 to where we are now, magical like 10 years later, because very, very similarly, in the US set something in place with the Financial Crimes Enforcement Network. So this is basically when they suddenly introduced the Bank Secrecy Act into transmitting with cryptocurrencies and virtual currencies. And this is where suddenly people can become liable, especially in the aftermath of the 9/11, terrorist financing, money laundering. And this is, I think, where it can become really tricky for everybody that handles cryptocurrencies to be really liable within this Bank Secrecy Act. And this was, again, implemented in the US 2013. And this is why a lot of crypto companies moved then away. And really, the industry was really scaled in Asia. And then, we can talk about it endlessly, but it was really moved around then from China to Hong Kong and so on.
And so, okay, so it sounds like initially crypto was seen, as a great tool, great way to sort of get special projects funded, a great piece of technology maybe, and then the threat of enabling capital flight became, too much for China to bear. What's going on in other parts of the world? I'm not too familiar with. I know that there's some new regulations in the EU with regards to crypto, and of course we have the US situation.
Yeah, I think one of my I guess one of my ideal cases is really the UK in this case. But of course, it was sort of like a secret was revealed this week with a 16Z, opening an office there. Because what you have actually in London, of course, you have a major capital with a lot of universities, so you have a lot of young graduates there. You have a very healthy venture capital ecosystem. You have the English law, English language. It's the heart of Europe. So I think the UK is actually also really kind of like one of these secret spots. I think that can really make a difference now because, again, I think what you really need the large pools of capital, and while they don't need to be situated or located within the UK, it's just good that you have like the financial center there, and I think that is why it makes it very, very attractive. So it really depends what kind of laws they might be passing, but there is actually a lot of interesting stuff in the works because, for example, as some people thought, the advantages of crypto firms, they do everything, right? They're your exchange matching engine, they're your OTC broker, they're your borrower, they're your lender, they're like your prop trader, they're just everything. But of course, in traditional finance, all these units, especially the custodian, is like broken up, and they're all separated and they're individually regulated and monitored by the regulator. And I think there's actually some news out that LCH, which is one of the largest clearer globally for basically TradFi, is really looking into digital assets, and they are probably starting to announce this, in due course, that they will also have custody for digital assets. And I think then you see the as a major financial center is really paving the way for big institutions to come in and feeling very comfortable, because suddenly it's not everything is done on one exchange, it's done within different entities. There's a clearer, there's a custodian, there's an exchange. And as we know in TradFi, the wealth is not really accumulated by the exchanges, right? The exchanges, yes, some of them have become very wealthy, but this is probably more to do with the tick data that they sell to high frequency hedge funds, that they need this for their models, but not because of their matching engine. So I think in TradFi you have, of course, a lot of large hedge funds that are have become really wealthy and really driving everything. And I think in due course, or over some time, you will probably also see this in the crypto world, where suddenly exchanges become really like a matching engine. The money might be made on the prime side. For example, how we've seen the last kind of like 20-30 years, that really the Morgan Stanleys and the Goldman Sachs, they made all the money really on the prime side. This was the easier money, providing financing and short access to those hedge funds. And then the exchanges really made the money by providing the data. And I think, crypto seems to go down this route as well.
Yeah, and we have some good friends working in that space. It's very excited to be working in that space. But let me bring us back to regulation for a minute, because just last week, the SEC announced that it was going to be suing Binance, and then the next day they announced that they were going to be suing Coinbase. And there's this feeling now, it's kind of been there for a little while, but there's a feeling now that the US is taking an incredibly anti-crypto posture. And as a student of the various cycles, and I guess what interests me in particular about your perspective is that I think you've been such a keen observer of this narrative over time. Where do these actions fit in? Were they expected for you? Did you expect that this would happen?
Oh yeah, of course. I mean, this is really all expected, and as you can see, this is all already in the book. So there has been really nothing has come out so far that is not in the book yet. And while the book really takes a very neutral stance on a lot of those events, it just really tries to tell you the facts and really tries to tie them all together so that you kind of see how they're all connected. And I think this is really one of the key takeaways. How everything is really connected. I think there's probably some more stuff that is going to come out. Not everything, of course, will be in the book because, we have, of course, heard from the SEC that some of these previous CEOs of Binance US appear to have flipped or at least to have, worked together with the SEC and provided more evidence. I mean, of course, there's a lot of WhatsApp chat and a lot of, previous communication between various people within the organization that has been revealed. But I think there's also still something missing. So I personally think that the Department of Justice has not come forward yet, but I think they will, because we have seen this in various other instances. As you may know, on page 83 on the book, one of your previous employers, right? They got also because of this Bank Secrecy Act, and I think this is really why it's key. This is why really 2013 in the U.S. was so key because of this Bank Secrecy Act, because suddenly this tying in with having not proper KYC, having not proper onboarding procedures initially, and Binance has actually been quite vocal themselves about it, that initially for the first 2 years, this is stated by Patrick Hillman himself, who's the chief strategy officer. Initially the first 2 years was really about building the technology and not focusing too much on compliance, because according to him, these were all like technology people, and they weren't really like aware of the regulation that was needed. And initially, all your KYC, what you needed to do is provide an email address. And I think going back and of course in changing all this, and Binance was of course growing like very quickly, it's very difficult to really put this in place in hindsight. I know like now, of course, or even like last year, Binance's onboarding has become probably the most stringent in the industry. It was a lot more difficult and took a lot longer than on FTX, for example. But nevertheless, I think Binance tried to clear some of the earlier faults or mistakes, but the regulator is not really playing ball. And I think when we look at some previous cases, what actually happened, and I think all these accusations so far that has come out, and of course they need to be proven in court and everything, not my time to judge, but it's really some of those WhatsApp and communication and other channels that have been put forward. There are some accusations that, for example, some terrorists have been trading on the exchange, or some parties that have been sanctioned, be it Iran, be it North Korea. And I think again the key thing here is not really, is it a security or not? It's really, does it fall under the Bank Secrecy Act, the BSA? And I think this is where, for example, where BitMEX eventually had to pay $100 million as a company, 10 million for each of one of the three founders. Where there have been actually some criminal charges. As house 6 months house arrest, 2 months probation for Arthur Hayes and everything. But again, I think here you can also, look at it this way, that, well, Arthur Hayes is an American, right? Versus these accusations are not against Americans, they're, well, against Canadians maybe, but we have to see what comes out of that. So I think there will be one more big shoe to drop, and we have to see how the market reacts to that. But I think the playbook appears to be similar in terms of what the SEC has been doing after the 2017 ICO craze, because this was also stopped in various countries and in various forms. And of course, there are differences between various countries, and more than happy to talk about this as well. But of course, the playbook with the exchange, and these are like overlapping stories, seems to be more a little bit down the line of BitMEX right now.
Yeah, I see that as well. I see a lot of similarities, and I think, in many different ways, I would be unsurprised if things don't progress along similar lines. I guess taking a step back for a second and just looking at the big picture, where does this leave us currently as an industry? And let me give you a few sort of scenarios. I was just discussing this with a good friend last night, actually. And because we're talking, as many crypto people do when they end up catching up, is we talk about, well, when is the bear market going to end? When they're going to thaw, et cetera, et cetera. And one scenario that we agreed that would be very difficult. So first of all, if Binance essentially goes out of business, either and you almost hate to say this because they're such a pillar of the ecosystem, either actually like going out of business, like the DOJ shuts down their website, or sort of functionally going out of business, meaning that they're under so much scrutiny that they can't manage any of the relationships needed to keep their platform running. How big of a hit does the crypto ecosystem take from that?
Yeah, of course, we're not predicting one way or another, but there are many precedents in all this. And the surprising thing is really, that this sort of like this book that I just published last month, it is a collection of a lot of exchanges that we have come across. And of course, when we look at the index, you read the names and, oh yeah, I forgot about this exchange, right? I mean, and I think there were like so many exchanges, and it was rarely that an exchange was staying on top for more than 3-4 years, right? Of course,
Yeah.
we talked about BitMEX, and there was one key event that changed everything for BitMEX, or
That was
probably like
my first day on the job, by the way.
yeah,
Yeah,
well,
March 12th, I think it was. March 12th,
really?
2020 was
Yeah,
literally my first day at BitMEX. So you can imagine. Yeah, but
yeah.
anyway, go on.
So you're the one who turned off the engine.
Yeah. It was my call. Sorry, guys. Yeah.
So, but it's very interesting because and before we had like Bitfinex, and before we had like BTCE, and there were like a lot of other exchanges. So I think it's really these things, unfortunately, it seems to come and go, and of course we're always hoping that some of those exchanges like were staying. And again, I think Binance has of course done a lot for bringing really a lot of people in the industry. They have been very active in emerging markets. They have built out globally. I think they have at one point they had like 8,000 people. I mean, which is really like a lot for an exchange. And but of course there are some other things that are out of the user's wishes or the user's control. And I think this is really needs to be like settled, like of course differently, but I think we can see this how the momentum and the users are still very supportive of Binance. But I think this was like very similarly with and I don't want to compare them to BitMEX, even there are a lot of comparison what of events happening in this space. But I think it also happened that, for example, like BitMEX over time kind of lost a lot of their power, and suddenly became like a much smaller exchange than they once were. And I think this is really the problem with crypto and with crypto firms, that once the trust is lost, users just kind of like move on to the next big thing. And I think we have to see how everything kind of like moves out. And I think the one of the key differences is of course that whatever happened at BitMEX, it was on a much smaller scale than maybe happening in Binance, not because of the issues, but in terms of just like the money flow. So the money flow was, of course, a multiple. I mean, nobody has ever had an exchange, trading, hundreds of billions basically per quarter. And I think this is also where it's becoming like very difficult to really monitor everything, what's going on in the company, monitor the whole KYC process. And I think now Binance has something like 700 compliance officers. I mean, this is like 10% of the company, which is also like humongous. But I think the problem is a little bit when you're just like so large, it's very difficult to keep track of everything. And if you're offering it to anybody, then it's difficult. And yeah, so.
Yeah, I guess so. The question is though, Markus, is and I don't say this to wish ill on Binance. I think Binance has been a fantastic asset for the ecosystem, but I do wonder in a world where maybe, as you say, like Binance is losing some of its authority, are other players ready to step up? Is the ecosystem ready to respond to that?
Yeah, I mean, I think there are really two important factors, and one is probably like the question you kind of like raised, 2, 3, 4 minutes ago, was really, what is really like the new bull market? And one thing I thought in December last year is that we have made the low, and I was very bullish on risk assets for this year. Risk assets meaning stocks, meaning crypto, on the back of lower US inflation, which I think we're seeing now really coming through, and therefore the Fed would stop hiking interest rates. But while these macro factors have an impact on the crypto market, initially at one point, this is really not how a crypto bull market develops and evolves. And this is really, again, the analysis from these 4 bull markets. You need really like a powerful theme that's really driving it, and ideally some invention, some new technology, some new use case for it. And of course, it's certainly not just like, well, the Fed is going to lower interest rates now. I mean, this is really not enough. And while I think for equities, you tend to say, well, if the market has rallied 20%, it's a new bull market, because you don't really, try to understand the themes. I think in crypto you should. And I think it doesn't really matter if the market is up, 20% or 100%. It really matters, what is really the theme? Do we have like a yield farming summer again, or do we have another theme developing? And unless we have that developing, I think it's very difficult to call this a new bull market. And I think the question is then, is Binance, the question that you raised now, is Binance really trying to step away, letting somebody else, take really, I think, take the target on their back really here, really. And I think we're seeing this slowly. Binance has already stepped back really since beginning of the year. It's no coincidence when Binance kind of initiated last July this zero BTC trading. Their market share went up from 50% to 70%, and of course, this caused a lot of other exchanges to suffer.
Zero fee trading.
Zero fee trading in BTC.
Yeah.
Because it's the largest pair basically, and except in Korea, of course, in Korea you trade a lot of like smaller coins and altcoins the whole time. But normally every exchange, the biggest pair is still BTC, because as we know, BTC is around like 48% of the global crypto market cap. But it's no coincidence that I think 3 days after Binance stopped zero fees on those pairs, that suddenly the CFTC was handing down their own lawsuit. So I think they must have been aware. And I think since then, of course, we have already seen some other factors about, the Paxos, Binance, BUSD dismantling. The market cap went from, I think, like $23 billion to now a bit over 6 billion only. And I think we're seeing this in a lot of other data, that really the market depth has changed a lot. And this caused, of course, Jump and Jane Street to kind of like step away a little bit from their market making activity. So it has a big impact on the ecosystem. And I think it impacts a lot of those high frequency trading firms and market makers and liquidity providers. And I think the next leg really, and this is what we're seeing, I think, since last week, is really that also a lot of those smaller altcoins, those trading activities are also being stopped. And I think this caused a large move lower in the open interest of those perps for those coins. And I think this really shrinks really the trading capabilities for anybody in the industry until we really have a new bull market, coming out of all this.
And if I twisted first of all, thank you for that. That's just some tremendous insights you're sharing. But I guess if I really twisted your arm and made you say something, what would you guess would be maybe like a theme that could drive the next bull market?
I think it's just really, really difficult to see, right? Because also like DeFi summer, it came really out of nowhere, and it came really, really quickly, right? It was suddenly, moving within like really 2 months, where a lot of copy protocols were set up and everything. We had got the vampire, farming and everything. Um, a lot of people, of course, talk about, real world assets. I think this is the theme to some extent. I would suspect it has probably to do something more on the infrastructure side, you know, taking out or making the middle and back office operations of banks maybe become more efficient, be it issuance through bonds, be it kind of like tokenized some of those bonds, not necessarily tokenized of some yield product, but in terms of like distribution, booking, and maybe like trading. We know that, of course, the large uh, banks have been in crypto before. They built their teams also like in 2017 on a smaller scale, but then they kind of changed their mind a year or two later when the bear market hit. But I think even like in this bear market, a lot of those people still staying in banks, and I think we're seeing more kind of experimentation how crypto can really help the banking system itself. And of course, we have this time the difference is CBDC, so there is clear working together with the banks, and of course the banks are distributors of the government money in the sense. So I think it would probably something around this, but I think it's just difficult to see because some of those themes of like NFTs that might not be big enough, right? Of course, ordinals was obviously not big enough this Q1 really to drive the new bull market, but I think it must be really something like real adoption. But again, I think I look at it more that there has been like $60 billion in VC money deployed in crypto over the last kind of like 24 to 30 months. Somebody will come out with something and really drive the market, and then there will be, and I think a lot of people understand this, but in crypto there's a lot of open source, and this is why it's so easy to copy some projects and set up similar projects and just kind of like grab more market share than for this theme. And I think something along those lines I would look into.
Yeah. Well, let's see. It'll be exciting. I was hopeful for ordinals as well, but I mean, it's not done, right? But they're doing more with that kind of technology, but it doesn't seem to be, the killer app just yet. Markus, I really appreciate you being with me. I prefer to keep these conversations a little bit on the shorter side. You're going to be joining us next week. I'm going to have my friend Chris Holland from Holland and Marie is going to join as well. And the CEO of BitMEX, Stefan Lutz, is going to join as well. So you can address any BitMEX questions to him. I'm sure he'd love to hear that. And we're very much looking forward to that. Before we close out today, I want to ask you, because at XD Academy, we really care about education. Our mission is to take the crypto curious into the crypto serious. And I think mostly about those people who have been hearing about crypto for a long time, but haven't bought their first cryptocurrency, or maybe haven't used crypto in the ways that they possibly could. From your perspective, what's one thing that you wish somebody outside of the sort of like crypto native circle, what's one thing you wish that you could teach them?
Yeah, I think the key thing is really, how technology has really impacted our lives more and more. And I think the key problem is always that people are not really well educated in programming. And, everybody thinks, a programmer is just like kind of like this nerdy guy in the basement. But I think everybody has to really beef up their trading skills and programming skills. And I think a financial, I guess, numeracy is very important, but I think also with this programming is really like a very key for all kinds of jobs. So I think the number one thing is really to focus on, programming, be it Python. I think that's really like a good start. And I think that's really like the focus, because I think the one thing might change, the themes might change, some of the the way how we look at markets and view the cryptocurrencies might change. But I think if you have a solid foundation in programming, I think this can like help you whatever you do, because it can be used in so many other areas now as well.
Yeah, as someone who hires engineers, I can tell you that there's a lot of demand for that skill set for sure. Markus, thank you so much for being with us today. We look forward to having you next week. Guys, I hope you enjoyed this conversation as much as I did. If you're interested in learning more about any of the subjects we spoke about today, or just want to meet some cool, helpful people in the space, please consider joining us at the XD Academy Discord. The server is at dsc.gg/XD Academy, and we'll be offering special rewards for the first 100 and 1,000 joiners of our Discord when our product launches later this year. So make sure to get in early to be whitelisted for special perks. I'll see you there.